This is Scott Beck with the Becker Private Equity Podcast. Again, as always, if you ever have an idea for a topic or a guest, text 773-766-5322 or reach us at sbecker@beckerstrategygroup.com. So today's topic is 6 lessons for the week. And these come from different places. I'll start with the stock and financial sort of world topics. So we're in a spot where over the last few weeks, the market has fallen about 5%. And this is a reminder, if you're 100% in the market, that means your portfolio itself has fallen by 5%. If in contrast, you're 20% in the market, that means that your portfolio has probably fallen by about 1%. And the real lesson here is that at the end of the day, allocation and how you allocate your assets between bonds, stocks, and cash matters. And it's probably the most important thing you do in terms of developing a financial strategy and investment strategy is how are you going to allocate assets so you could live through the ups and downs. Now, if you're investing for the very long term, traditionally it's been shown that equities outperform bonds and cash, but many of us, even if we're investing for the long term, don't deal well with the short-term real challenges that come up. I've seen over the last few weeks, the S&P 500 has fallen from 4,500 to about 4,200, down about 5-6%. And again, just depends on how well you can deal with those losses. For a lot of us, we don't deal with them that well. So allocation of our portfolios is very, very important. So that's lesson number one that just we always are reminded of when the market has a tough week. Second is, build a cash stockpile. And no one has done this better than Warren Buffett and Berkshire Hathaway, but having cash allows you to work through difficult times without having to sell assets when they're in trouble, when the equity markets are down or whatever the markets are that they are. So always build a cash stockpile. People talk traditionally, financial advisors, 3 to 6 months of having cash. I think a bigger number is probably very, very important. I'll add on a third lesson here, which is never get yourself over indebted, never use debt to invest in stocks. We'll call that a third lesson. I know this is going to be 6 lessons for the week. I've now added that. It's probably going to be 7 lessons for the week, but don't ever let yourself get overextended and never use debt margin to invest in stocks. The fourth topic and the fifth topic are ownership matters and play to your strengths. Ownership matters in business. It matters in sports. It matters in almost everything. Because ownership, even if they're not actively involved in management day to day, has to be able to pick leaders or pick a board that can pick leaders. And we've seen it over time and time again, is if ownership is bad at this, then ultimately the value of the franchise, the value of the business, the ability for the business to perform doesn't perform very well. You think about companies like Apple, that for Steve Jobs at some point or somehow or another Tim Cook became CEO. What a brilliant choice. If they'd not picked the brilliant Tim Cook to run the business after Steve Jobs, God only knows where Apple would be. Similar is true with Satya Nadella at Microsoft, brilliant leader, but ownership matters, boards matter, who picks those leaders matters, and I'm reminded of it over and over again. I'm reminded on a very personal level in 2 different ways. One, magnificent CEO of Becker's Healthcare, Jessica Cole, who took the company to heights I could have never imagined after founding that company. Second, I'm a Chicago Bears fan, and the Bears do an absolutely horrendous job of picking leaders to run that franchise, and so ownership matters. The fourth topic comes out of a discussion, and it's really fourth to fifth now that I added on one about debt and margins in financing. But the next topic, the next lesson for the week, comes from Charlie Munger, who's Warren Buffett's partner at Berkshire Hathaway, and he talks about playing to your strengths. Be involved in things where you have advantages, where you're good at something where others might not be so great. When I was originally a lawyer, I looked at this and said, oh my goodness, I want to compete in a specialty. I don't want to be competing against the most driven litigators and corporate people in the world who are doing multi-billion-dollar deals. It's not that I wasn't smart enough, but didn't want to compete against those people in building a niche media company. Again, didn't want to be a generalist publication, couldn't compete on print, and ended up competing on digital. But it became clear that you always want to compete to where your strengths are. We talk about this in sports. I'm a good enough golfer, good enough tennis player. By no means am I great in either of these. But if I want to compete against great players, I just can't do it. I'm not going to have to drive that long. I'm not that good. It is what it is. I better choose not to try and make my living playing golf or tennis because my family and I would all be starving. So those are 5 points so far. Allocation is everything. Build a stockpile. Build a gas stockpile. Don't invest on margin. Don't get yourself overextended. Ownership matters, and play to your strengths. The two other lessons for the week, and I know we started this with 6 lessons, we're going to end up with 7. Be generous whenever you can. It's not always easy, but karma is going to be with you if you're generous. So look to be generous whenever you can. You can't get yourself overextended, but when you can be generous, choose generosity. The 7th thing is, give people the benefit of the doubt. And you don't have to keep on giving the benefit of the doubt. When somebody says it doesn't resonate well with you, give them the benefit of the doubt that they weren't trying to be snarky. They weren't trying to attack you. They just had something they wanted to say, but they didn't mean it how you might interpret it in its worst light. So that's the last 2 lessons for the day, is be generous whenever you can, and also give people the benefit of the doubt. I find, you obviously there's a point where that runs out. You can't keeping people the benefit of the doubt if they keep on taking advantage of you. But you're better off starting off with giving people the benefit of the doubt and going from there. Again, those are our 7 lessons for the week. Started with 6, we ended up with 7. We hope you enjoy this. Feel free, as always, text Scott Becker 773-766-5322 or visit with me on LinkedIn. Thank you for listening to the Becker Private Equity Podcast. Thank you very much.